Good morning, my name is Donelle Brooks and I'm the National Partnerships Manager at Early Pay, and welcome to Partnership Series number 5 with the ever-talented and most stunning CEO of Credit Fix Solutions, Victoria Costa. Welcome, Vic, to our Partnership Series.
Thank you, Donnie. Thank you so much.
Just a little bit of housekeeping for everyone this morning. We expect there to be lots of questions today and we really encourage that. So please use the chat function at the bottom of your Zoom screen. And if we can pop them in while we're talking about that particular topic, we will. And if not, I'll certainly address them all at the end. So we really do encourage this to be a two-way webinar rather than us just sort of talking to you. But we hope that we're going to cover some pretty interesting information and things that we often probably question but don't really know the answer. So that's why we have you here, Vic, the expert in all things credit fix. That's what we like to call it.
It's never a sexy topic, but it's extremely important for us as business owners and for our clients. So
absolutely. And I think sometimes we don't take that into account, that a lot of these principles are very much things that we can use in our own business. But certainly for most of our brokers on here today, it will be how they can assist their clients. You know, a lot of them appreciate that sometimes these things can take time to be able to, you know, get settled or get removed or etc., which we'll cover. And that there are lenders that can step in and take place. But as a broker, being able to get that client into the best rate and the best product that suits them, there are options out there for you to be able to assist those clients, especially when, you know, their choices are being, I guess, hinged because of their credit file.
Yeah, that's right. Exactly.
So, Vic, I just want to get into maybe a little bit of the consumer side to start with, and really talk about, you know, we've had rate hike after rate hike after rate hike. We're starting to see that maybe property values are starting to hold, though, even though we're expecting more rate hikes to come. What are you sort of seeing from, you know, a finance perspective when clients are applying for finance?
There's definitely an influx of inquiries for people and families who are scrambling for better rates. So as you know, we're very broker focused and mainly, you know, referrals coming in from brokers. So brokers are seeing reports and flicking them to us, but there's a very high number of consumers who've just got missed payments, you know, a couple of credit card payments, a couple of personal loan payments, and then they're maybe coming out of a fixed rate. So we've got that massive bulk of mortgages coming out of fixed rate this year, but also those families who were maybe with the high interest rates because they weren't too high 2-3 years ago, but now those 5-6% are turning into 8-9s, and they're just desperate to refinance and get back into the lower rates, which aren't 2% anymore, right? I mean, it's 5 or 6%. So lots and lots of education for families around, you know, making sure they are paying on time. But even with missed payments, we're just telling brokers and their clients, look, go and lodge a complaint yourself. Because I tested a few hundred cases since it started a couple of years ago with repayment history information. And what I found is a lot of and we don't get paid unless we're successful, as you know, so you can't do all that work at a cost, like, you know, go out of business. But a lot of times the banks were just coming back to me and saying, no, under the NCCP, we don't have to amend missed payments. We're not amending them. So we've actually started the last few months giving out this strategy to brokers and their clients on, hey, go and lodge your complaint and your story, write it as best as you can. And brokers, you know that you write really great stories all the time. Clients can do that. And consumers are coming back to us and saying that the banks consumer facing are sometimes on a goodwill basis amending those missed payments. And that can make a really big difference in interest rate.
Yeah, absolutely. I wanted to actually ask you about that, and we might delve into it a little bit more later, but we spoke about, you know, during COVID that a lot of people were taking, you know, their hardship, and that those hardship times were not going to be evident on their credit file as missed repayments. And we're hearing a lot in the market that has happened, that it is affecting their repayment history, even though they've been in an agreement with their, you know, with their funder. Are you saying that? Is that true? Is that whispering? Is it certain lenders? Is it?
Yeah, definitely seeing that. So as of June last year, they changed RHI, repayment history information, and they added in FHI, like we needed anything else on our credit reports anyway. So that's financial hardship information. So instead of before that, it was just a missed payment was lodged or an R for not reported. The new FHI line shows an A or a V for a variation, which indicates that 110% that consumer has been in hardship. So there's no getting around. There's just an R or a 1 and, oh, you know, my handbag got stolen. It's there in black and white for everyone to see. So, yeah.
Is that new FHI, is that actually affecting credit score as well?
It shouldn't affect score, and we
Okay.
haven't seen, although people often with FHI also have negative missed payments in RHI before the FHI, which is already pulling down the score anyway, or, you know, they've made too many inquiries because before they've seen a broker, they thought they could do it themselves. So behavioural issues have already caused a lot of these people to have bad scores anyway.
Yeah, sure. And so, you know, we sort of had COVID and now we have our problems with our economy as a result, really, albeit that it's probably what everyone, you know, especially those old school planners and people who have been in the game for a while, it's a fiscal clock, right? This happens and share prices go up and property goes down, and then the share market crashes and property goes up. And, you know, we've seen this before, but what else are you noticing, like with the clients that you're dealing with at the moment? What do you know, like when they're coming to you, what are they coming to you with? What are some of the common themes you're seeing?
With consumers coming from their brokers, with the credit reports, we're seeing a lot more messy reports and a lot of more small businesses coming to us because they've missed things because of COVID, because of floods, because of fires. We're seeing probably about 50% of inquiries where we are just educating and giving them tools or ways on how they can learn to protect and improve their credit report data and their scores moving forward. The other 50% that we're taking on, we're probably about 80-90% success rate. That's your defaults, court actions, you know, the really heavy duty stuff that's on there for years. So it is great. And those successes, I mean, we're seeing scores going from, you know, 300s, 400s up to 800-900 from removing one listing. And I mean, if you think about, you know, one small default removal might cost you $1,100 or whatever it is. And that's the difference between $2,000 per month on your home loan. So that's been really awesome to help those people who are now really desperate to get out of a sticky situation and get, you know, back on track. Especially with what you've got, food prices that have gone up, you know, you've got rents that have gone up for business owners, for all of us, you know, you've got the cost of business inputs, you've got labor market stresses, you know, you can't get good staff anymore, you know, and supply chain that we hear from a lot of, you know, those sorts of businesses as well. It's getting really hard. Like every area of business seems to be really difficult at the moment. So it's good to be able to be there and at least help with this little section. It's not all of it, but it's a very important piece.
Yeah. And look, obviously we know that your credit file can affect not being able to obtain finance at all, depending on what you have on your file. But what are some of the other consequences, I guess, of having something on your credit file? Yes, you may not be able to get funding at all, but, you know, talk to me about maybe seeing not being able to go with lender of choice, or lenders operating differently as far as their lending criteria with RHI. Like, what's your insight there?
Yeah, I mean, we're seeing not just with people going for home loans or refinance, we've seen a lot of people who can't buy a car. You know, they need a new car. They need to get to work. They need to run a business, but they're looking at an interest rate of maybe 29% instead of 9% for asset finance. And so they're just thrown straight out of the market. So it could be the difference between running your business and being out of business, which is very scary.
That is scary. And you're right. And then we already have financial pressure and burden. So if you're someone who's already dealing with increases in mortgage prices, for instance, with your home loan rates, and then you do need that new car, you know, or the washing machine blows up, or, you know, something that happens that we all deal with. We all have these things that happen in our life where we need to access funds to be able to repair or replace. And so, you know, that puts even more financial burden on, because I feel as though then sometimes, you know, especially in the consumer space, We have people, you know, accepting loans and deals that just really don't fit, but they don't have any other option purely based on what's on their credit file.
Yeah, and the other thing that we're seeing a lot of is that the last couple of years, a lot of businesses have got loans to pay off debts, but they're not really trading solvently. And then, you know, the ATO, as we know, had this very like hands-off approach on collecting debt 2021, 2022. That's now changed. So like the Deputy Commissioner is all over this, and they're out there to grab any debts, and the amount of demand letters that are going out is huge. The amount of court actions with ATO are going to be on the rise, and we're pretty much back to the same sort of level of debt collection pre-COVID. So although it seemed like we kind of traveled along okay during COVID, in reality, there's a lot of businesses out there that aren't really trading solvently.
And look, that's really interesting. It's just popped in now. Is trying to remove ATO issues on credit files something that you guys can do?
Oh, there you go. No, we can't. There's no arguing with the Deputy Commissioner and his crew. So
Excellent. There you go. Good question, though. I liked that.
Question.
Talk to me about Equifax Supply One. Like, we've touched on FHI being something new, and I think you mentioned it came in June. Is that right?
June, July last year.
Yeah. Okay. And so Equifax Supply One, what's that all about?
It's a new scoring system. So Equifax are using a new algorithm machine, I suppose you call it. I'm not an AI tech. It's called Gini, Gini, if anybody wants to look it up. I've had a bit of a read, but what it means is that Equifax can now look across more data to give us what they believe is a better score. So it's really for the girls and guys in credit. So, you know, a lot more lenders are using it. I think last year there was only a few using Equifax One rather than the comprehensive score. I've seen Equifax talk at a FBAA event recently. I think he said that's up near 30 lenders are using Equifax One. And so it's using, you know, postcode data. It takes out RHI, so that's good. But it can be lower than the comprehensive score. So just be mindful when you're running your reports, if you're running the comprehensive score, which is usually what brokers are getting through the ag groups and associations, double check the 1.1 score. It's a tiny little score. It's underneath the comprehensive score on the summary page of a credit report, or you might actually, in fact, be running the Equifax One score. But the key thing here to be aware of as a broker is if there's a big difference between the comprehensive score and the Equifax One Apply One score, if that lender, say it's Macquarie, and they're using the one score and that's sitting at 200, but you're reading a comprehensive score of 600, and we have seen that, potentially you're going to get decline without realizing there's an issue.
Vic, do you know why lenders use different scores?
It's all about the quality of the algorithm. So with the new Equifax Apply One score, what they're spruiking to lenders and credit teams is that, and I guess it must be true because they're using it, they've got all the data to back it up. It is a score that will give a lender a clearer view of whether that person will default or not. So it means that potentially they can protect the amount of loans that go into default more efficiently and more safely by using a better scoring system. So we'll probably see it more, I would say, steering more towards just the Equifax Apply One score.
It'd be great if Equifax just had one score, wouldn't it? And then we'd all have to
really
work
would.
off.
And then it's not just that. You've got, you know, ANZ, I know, are checking Equifax, Illion and Experian, and you can have different data sets across the report. So Credit Corp, for example, who owns Wallet Wizard, they report an open account to Illion, but they don't report it to Equifax. And then Illion says, oh, well, Credit Corp, I don't care that it's Wallet Wizard because it says Credit Corp. Well, they're a low-grade lender, so we're going to lower your score because of that. So then,
yeah, right. That's interesting. And talking about certainly working in alternate commercial for a long time, I know that, you know, initially when unsecured lending, for instance, really took off, that there was very clearly you know, a way that banks and what we class as mainstream lenders, how they would see inquiries from, you know, the likes of, you know, Early Pay or Business Fuel or ScotPack or Prosper or whoever it may be. And I feel as though that's changing a little bit because a lot of that has always been around appetite. And so banks haven't had the appetite to support a lot of small business. So they've gone to seek other funding. But I certainly know that in the consumer space, it's still seen pretty poorly from mainstream lenders to sort of have, you know, the old school payday lenders. But we've spoken about this a few times. And for those that haven't heard Vic talk about this, can you just touch on the Afterpay, Zip Pay?
The good old Zip Pay story. It is a good one, isn't it? Oh my goodness. Yeah. So with low grade lenders, I mean, I don't mean to call them low grade, and it really is idiotic that we are being punished for using buy now, pay later and alternative lenders. I don't understand why. I mean, especially being business owners, most banks don't want to touch us with a barge pole anyway. So where are we supposed to go? And is it low grade just because we choose to pay something off interest-free using buy now, pay later? Most people would think, and it does seem smart, why would you get a credit card out for $5,000 with interest when all you want to do is pay off a sofa interest-free? It's actually a smarter decision if you think about it, money-wise, but we're being punished by the algorithms within the credit reporting agencies because they're saying, oh no, Zip Pay's crap, you know, or this lender's crap. They're not, they're just alternative. I spoke to Equifax, you know, and we've seen, for example, I had a lady, she wanted to go through ANZ with her broker and her credit report was fine, but she just had, and I'm not having to go at Zip Pay, this is obviously coming from the credit reporting agencies. She had 2 Zip Pay inquiries on her credit report and her score was like 550. Now we managed to remove those, you know, a few $100 later, a few weeks later, they couldn't produce the contract. So we got them removed and her score went up to like the 700s. So then she could go to ANZ, but it's really frustrating to see that happening in the credit reporting systems. I spoke to Equifax maybe a year ago, had like a group online chatty thing. And I sort of dared ask him, I said, like, why are we being punished? And he said, oh, we'll be looking at changing those algorithms, making sure that people aren't punished. We're aware that it's a global movement and it's a global shift. And I'm like, nope, still hasn't changed.
No. And, you know, look, I think there's, and you're a big advocate for this, I think there's a lot to be said around education in this space as well, especially for, you know, our young people, you know, and you're right. And buying something, you know, on a buy now, pay later, interest-free, being it a sofa, being it, you know, the washing machine that's blown up,
Yep.
you know, that serves a purpose. We all used to do lay-by, right? So you would be
exactly.
paying, but you would have to wait till you got it. We know that's changing the world, but this whole like buying pizzas and going out for dinner and doing it on Zip, like I'm not sure whether the younger generation understand that every time they do that, it's affecting their credit file. Is that actually right? Is that true when they do that?
It really does. And all you can then do is just try and pick them up if they come to you and say, look, here is our credit reporting essentials guide, which we just give out. You know, it's everything to do with where to get your reports for free, how to read them, what do inquiries do to your credit report and score, you know, what's the importance of paying on time. It goes through like the company file and all the different areas. But I don't see that information being handed out anywhere else. I mean, look, Equifax is trying, and they now have an educational piece at the back of the reports they're giving to consumers, but they're still not saying, oh, by the way, there's Ilian and Experian. So there's nowhere where you can holistically get all of this. So until they come to us, it's almost, you know, we're just being reactive. And I don't like that. I believe that there should be some education out there somewhere, but at least we're here today. And then we can, as a group, as an industry, change that and educate more. But it's really important. And it's so hard. Like, you know what it's like trying to get into schools. We've got a piece that we're doing with Edith Cowan University over in WA. And when we're finished with that thesis, we're going to share that across with, you know, Western Sydney Uni. I believe they're sister universities or they're linked somehow. And at least try and get that in as a small module within the finance schooling at university. So maybe a year 1 student just does a short module on credit reporting. But getting that out, it's just so hard. It's very frustrating. And it's sad because you've got people coming to us now who can't buy a car, can't pay their medical bills because of things that they just simply weren't aware of.
I feel like it's another sidearm for you, Vic. We need to get you into like our year 9, 10, 11 and 12 students because, you know, we don't have the old Dolomite accounts anymore. You know, financial literacy is really and there's lots of advocates in the industry who take care of that. But I certainly think that from a credit reporting perspective, popping down to the local shopping centre and buying $200 worth of clothes on buy now, pay later, it's, 17 or 18 can really affect what you might want to do at 22 and 23. So I have got a question around RHI because we have been talking about it from Nick. He's got a customer who's declined just this week for a personal loan. He had an RHI 4 on his CCR. Even though it was agreed there would be a 4-month stop on his repayments with his home loan lender. He was told it wouldn't impact his file, but obviously it has. All of his other loans, etc., are all up to date. Is this an RHI that can be taken off, and if so, how?
Oh, yeah, 100%. So what I can do is share a template. If you want, Donnie, I can send it to you. You can share it with everyone. It's a template where it just tells the person exactly how to load a complaint themselves in writing to a lender to plead or kind of beg, I suppose, on compassionate grounds to amend that 4 back to an R or a 0. By law and under our instructions, because I live in the world of IDR, internal dispute resolutions. So as per ASIC, AFCA, all the rules and regulations, if a lender or credit provider, and us too as a broker, we've all got licenses, right? If we receive a complaint, we have to resolve that internally within 30 days. So as long as it's done correctly and lodged to the complaints team, they will get back to your client within 30 days. So yeah, I'm happy to share that with you, Mick, and give that to your client. And all I say is write the story out as best you can. Any supporting documents, any extenuating circumstances, say a prayer, wait 30 days, you could be lucky.
Right. And we'll certainly be sharing all of your information with everyone that's attended today. But yeah, Nick's replied already and said that would be great, Vic. So that could be quite helpful. Now, I want to move on to a little bit onto the consumer side, onto the commercial side. Obviously, that's the space that we play in. And there's often a lot of confusion around, which lenders do commercial checks, which do commercial and consumer apply, and what affects someone's personal credit score when they're applying for commercial finance. So I just want to go through some of those things with you. What strategies can businesses implement, especially today, to protect themselves from commercial defaults?
Such a great area to talk about, because we often forget about our companies and that they have reports. We think about ourselves personally, and everything we do personally does affect, everything, but commercially does too. So as a director of a PTY LTD, every time you're applying for a loan, you're most likely going to be guarantor. It's going to put a commercial hit on your personal report, but also on your company file. Things we can do as business owners: number one, check all your invoice terms. So if your invoice from your supplier says 7 days, pay it in 7 days, or ask them for an extension, because they can, although our companies don't have repayment history information, if we pay suppliers late, they can report that to Equifax and Ilion and Creditor Watch, which is a new credit reporting agency for company files. So making sure, check all your invoices, have a chat with your bookkeeper, buy him or her some chocolates and just be like, hey, make sure all the bills. I mean, I still pay all the bills myself because I'm so scared. I could have someone paying it for me, but I'm so scared something's going to go wrong, because we see a lot of times company files which are fine. There's no defaults, there's no court actions, they haven't got there yet, but they've just paid suppliers late, which is pulling their score down, and then business funding becomes difficult. Banks don't want to touch us even with a great score half the time, do they? So yeah, it's difficult, but yeah, make sure with suppliers as well, if you are doing regular contracts, what we can see is that they list an inquiry, a hard hit, every time the new contract comes through. Have a chat to those, and that's on your personal report and your company. So have a chat to those businesses and say, hey, look, can you just do a soft access on my personal file, soft access on the company file rather than a hard hit, because that's pulling scores down as well. And director's access shouldn't be a hard hit inquiry on there. So if you see any of those on there, they should be at the back of the report, should be a soft inquiry. But defaults, look, if you run 1 day late on an unregulated loan, they can default you within 24 hours. So, I mean, there's no asking for financial hardship. There's no asking for an extension. I mean, you can. There's a lot of, I'm dealing with a company at the moment. It's an old debt, and they want to help this person. This person lost everything a few years ago, is now back on track. So they do want to help, but they don't have to. So if you think you're going to be late, it's definitely getting something in writing that your credit file will not be affected, and that, it's 100%, you're going to give me an extra 2 months to pay this, right, without defaulting me. Or you need to get that in writing, because even if you then missed your payment arrangement, I've got a guy at the moment, I'm arguing with a commercial supplier over that. He paid half the monthly arrangement instead of the whole monthly thing he was going to pay, whatever it was.
Yeah, sure.
Yeah, and she told him over the phone, yeah, that's fine. So he thought, yeah, that's fine. But then the next month, she went and whacked the default on his company report.
And it sounds similar to that situation that Nick was talking about. And I think, I certainly know that in the non-bank space, that lenders are often quite a lot more open to work with clients, especially when they're on the front foot. But, similar to Nick's case, I think if you are making any sort of arrangement with a financier, be it commercial or consumer really, is to get that confirmed in writing in an email. Even if it's you send an email and they will fight tooth and nail to say, we don't accept email, fine, send me one. You can really, it's about being on that front foot and understanding what you are entitled to as well, and knowing that you can ask for that confirmation, and that you have every right to receive it, so that when this does happen and you need to either engage with someone like yourself, or you're pleading directly with someone on an RHI, that if you've got the evidence to support you, it's going to make life a lot easier.
Yeah,
right?
you just hold it up in front and be like, no, you said this, whereas a phone call, unless you want to go and start grabbing recordings and go and lodge a privacy commissioner complaint that's going to take you 6 months. So yeah, definitely be proactive, because being reactive is really hard, especially in the commercial space.
Yeah, definitely. Hey, Mark's just asked us another question, and we're obviously all dealing with the same thing. So RHI is fairly important and quite common at the moment to see issues with that. When an RHI is removed, is the impact on the credit score visible? Is it an instantaneous calculation, or is it delayed, or is it an average score improvement? Do you know how that actually works?
It's instantaneous. So
Okay.
So the AI is constantly just moving in the background and just looking at our data and trawling through data and giving us a score. So if you were to go and pay for a report every 10 minutes after you've done an inquiry, for example, you would see the change automatically. So as soon as RHI is amended back to R or 0, the score no longer can see that data. So say the score's 450, that data is removed. Oh, that data is not there anymore because it's just a computer. So it goes, okay, score 750. Because there's no missed payments anymore. Same with defaults, call action, whatever you're removing off the report. As soon as there's a change in data, the AI's already trawled through it and already applied a new score.
Yeah, perfect. And another question, I love doing stuff with you, because there's always lots of questions.
Yeah.
One of our brokers has also asked, what is the difference between a hard and a soft access on a file?
Yeah, no, good question. So on a credit report, we have our consumer and we have our commercial inquiry sections. Then if you scroll through to the end of, say, let's just take an Equifax report, for an example, to make it easier. The end of the Equifax report, you'll see an access section. That's the soft touch inquiry. So for example, if a debt collector is looking for your customer, they will do an access, so a soft touch at the back of the report. So it's not a hard hit inquiry for finance. They're just looking for us. So the difference is that when you submit a deal to a bank and they're running a credit report, they do not see the access part of the report. They only see the hard hit inquiries.
Okay, perfect. Thank you. That's a very good way to explain that. Shane's just reached out and said, did you say that the 1.1 score is the Equifax Apply 1 score?
Yes, correct. So yeah, on the comprehensive, you'll see they still haven't changed it. I don't know why, it's just an edit point, but it's comprehensive score, and underneath you might see it written as Vita score 1.1 because it was Vita. So they just never changed that. And then they shifted that out and pulled that out as a whole new report, which is the Equifax Apply 1.
Okay. Because Shane's saying in this experience, it didn't really indicate that the recent apply one score for the client via the lender was 511, but the 1.1 on their report was 816. Do you know why there would be a difference?
Were they run at the same time, and was one maybe consumer and commercial and one was just consumer? Because there's differences with the data we're pulling as well.
Okay. Let's see what Shane comes back with. Maybe he can talk to you about that one.
But we've seen people with a postcode change gone from a lower default rated postcode to a higher default rate postcode and lose 300-400 points in score overnight.
Right.
So even something could have shifted as well, which meant a different score, but we'll wait for him to get back to us as well.
Yeah, perfect. And again, I can put Shane directly in contact with you about that. And that is interesting because quite often as a broker, we will be, doing our check at the beginning of the process. We're doing our fact find, we're, sourcing the right type of funding for the client, and then the lender checks the file. You're right. We've seen very, very different scores where, from a lender perspective, we've gone back and said, look, the score's this. And the broker's like, no, I've got a report here. I ran it 2 weeks ago and it's this. But the client's been,
something's happened.
Applying directly elsewhere as well, not through the broker. So they've got 4 or 5 more inquiries since. So, yeah, I think one of the big things with that one too, Shane, will be just to see is that, are the dates the same? And where is there different? He said run at the same time, but Shane performed commercial and consumer.
That's the difference then.
Okay.
Yeah.
Perfect.
It's really hard, all these scoring. I don't know how you brokers are doing it. I really don't. I mean, I know I spend my days, helping people with the credit reporting side of things, but you got to deal with all of this before you even can look at your loan options. I mean, it's just crazy. Why we don't just have one credit reporting agency just completely baffles me.
Yeah. Is it hard to get commercial defaults removed, Vic?
Yeah, it is. It is because there's so little protection. There's so little legislation that protects us from commercial debts being listed. I mean, court actions are okay. I can remove those. That's fine. I've got my law firm. It just takes a few weeks. As long as the debt's paid, court actions, they're okay. Commercial, doesn't matter. Dentist, lawyer, they're all right. But commercial defaults, 100%, because I've only got 2 areas I can argue with them. Is number one, I mean, obviously there could be a contract error, of course, but number one would be that, goods were supplied that were broken, for example, and then whilst a dispute was on foot, a default was listed prematurely, or invoices were sent out incorrectly. And it's kind of rare that happens anyway.
Yeah. I think too, and before I sort of move on to my last question, which is letting us know a little bit more about how you work and fees, and that question always comes up. So we'll leave that till last. But I'm interested to know too, like in an ideal world, are we ever going to see one body, one agency, one score that everybody uses? Because, when you look at Shane's example, and I'm sure you hear this all the time, that's 300 points difference in score. Then you've got some lenders who use different agencies, use all of them, some that don't. Do you ever think that's going to happen?
I don't think so. I mean, it's just a typical government move. They sort of introduce new legislation, let everybody know what the rules are, and then just leave them to it. I mean, there's a court case in the States against Equifax, I believe, at the moment, which is some sort of like group complaint against Equifax for unfair scoring systems. If anything was to shift, I think in the US or the UK or Canada, then you might see the Australian government go, oh, we better do something about this. But we are so behind. We started these systems after New Zealand.
Yeah, right.
Like, this has been a system all over the world, US, UK, for like a decade or more, and regulated. But they have the same problems over there. The UK, for example, Experian is their main credit reporting agency. So their Experian is like our Equifax, but Equifax has now gone over to the UK. So they're a bit like the Experian in the UK.
Yeah, right.
It's happening everywhere.
Yeah. And it's interesting, working as a lender, it would be great. And I've worked on the other side as well, just to have, one source that pulls everything together and, but that takes a lot of collaboration and probably less dollars in individual company pockets that way if we all collaborated and made it one.
Yeah, I know. Funny that.
Yeah. Hey, Mark said he's seen Equifax 1 scores low with negative data scores higher and vice versa.
Yes.
Is there a simple reason for that, or
because
both ways?
Yeah, so the negative data only is not including RHI, but is just whatever's the rest of the data is on the report. But then the Equifax 1 score takes into consideration postcode, employment. It's a future predicted score. So the Equifax 1 is future predicting in 12 months.
Yeah. So it really is about, depicting, as you said, the client's ability to repay and the likelihood of defaulting versus what they've done in the past.
Yeah.
And how they've behaved in the past. So one is more about the past of the individual, and the other score is really more about the future and that likelihood.
Yeah, and that's why more and more lenders, according to Equifax, are taking up the Equifax Supply 1 as their main go-to score. But then why they, I guess it's so, really, I suppose it's a lender choice. If all the lenders just went, okay, we're all just going to use Equifax Supply 1 from now. But then they all have different rules. So then you as brokers have to work out like, oh, which one's ANZ check-in,
Yeah, correct. And, most brokers will have 20, 30 lenders, that they're close to for different scenarios. And that's needing to, understand a lot of different credit policy purely around score, and that's it, let alone the rest of the credit policy. So and look, Shane, Mark, guys, that we're getting the commentary through, we see it all the time, and I think again that says a lot about the rise of the non-bank lender, because the story of seeing a credit file where the score's 300, there's nothing on there. They've been trying to put out a burning platform in their business, so they've got a few inquiries. They can prove they haven't gone and got other funding, and the score's 300 and it shouldn't be. So I think you'll find that the non-mainstream are more interested in the story that sits behind that, and that the credit file can often be used as that tool to just put a big black X through an application without really also sometimes understanding what's on there or why it's on there. So that's why Vic probably built her business. And certainly appreciates where you're all coming from and deals with this day in and day out, which is probably leads us to the last question before, so everyone knows that, we'll open up the chat to even more questions now. But Vic, tell us a little bit about, why you started Credit Fix, how brokers can engage with you, and how the fee structure works for their clients.
Yeah, sure. And we can see in the great questions today, by the way, that you can see how complex it all is now. When I started the business 10 years ago, I really just started it locally in Parramatta for a local broker group, and just kind of said, hey, look, I can help talk to your clients about their credit reports, do a bit of education. If there's something on there to fix, I can fix it. Great. If I fix it, they'll pay me a fee, $1,000, $1,500, around that sort of cost. If I can't fix it, your clients don't pay me anything. And that was great, worked really well. I had 2 deals a week, single mum, as you know, just sitting there in a little housing commission unit, happy days. I think I worked about 3-4 hours a week in total. And then a broker comes along to me one day and he goes, you know that you're obligated to let all brokers know about this service? Because back then, all credit repair companies were charging up front. So I was the first, no result, no fee.
Right.
Well, I took that to heart, didn't I, Donnie? As I do. Of course I did.
Yeah.
So I created a bit of a monster. And here we are, 9 years later, and we're all across the country and we're helping brokers with their education. But I think more importantly, and exactly from what we've just been talking about, because we could go on about this for hours and then you still get stuck on credit reports, is we're here to save brokers time. This is a big pain point. I've seen it get more and more complex over the years. We see, 30, 40 files a day. We're in this area. We've got the tools for your clients. Don't feel that you need to spend an hour on this area. That's where we help our brokers. You see a low score, with their permission, you might have to chuck it in your bid if it's a regulated deal. Fair's fair. You've got verbal permission to share the report, but they flick us the report. We then do the educational piece. But at least if it's a no, and we give them some ways how they can try themselves or learn, you've created a sticky client. for the broker.
Yeah.
So that's what we're really there for. I mean, like I was saying before, I think 50% of the week we spend educating. The other 50% is we make a bit of money so we can pay wages and pay bills, so but I love that, and I believe this is very needed in Australia. And even if it's just little me going out to finance brokers, at least I can try and protect and capture some of the market and push them up into their wealth creation journey. So it really is, I love it. I get to go to PD days, and I mean, I got sick last week from New Zealand, but we had a lot of fun, didn't we?
We did have a lot of fun. See, and it's all just about, what floats your boat. People are like, oh, how could you work in compliance? Or, how could you be crunching numbers all day? Or how do you want to, whatever made you want to fight the fight and fix credit reports? But I think when you can add value, and when what you're doing is giving back, and that's certainly something that I know about you, is that's what you're all about.
And I'm from the school of hard knocks. I had bad credit. I went through a divorce. I had nowhere to live, a single mum with no bloody money, that. And I know how hard it was. So for me to be able to understand and empathize and help others who potentially have gone through that or going through that, it's really great work. You can't do everything. I could never be a broker. I tried being a broker, so high five to all the brokers. Yeah. I can't do that, but I can do credit repair.
I love it. Hey, quick one before we finish off, just rough fee example, inquiry versus default versus court action, where the fees sort of sit there.
Yeah, look, inquiries, it's a few $100 if you've got 2-3 inquiries on there. Once we remove them, we charge $200 per inquiry with an admin fee. That's it. So it can mean a difference of, a score of 700 versus 600 to remove 2 or 3 of them. Opens up the door to a lot more lender options. Obviously, you've got your lenders who don't credit score, which is great. And I'm sure the rates are still good if they don't want to spend the money, but you're talking about like $900, $1,100 investment. Small defaults at the moment, we just charge $1,100, $1,200, including GST, if and when we get them removed. We're very careful up front. So we'll give you a yes or a no within an hour or two, because I don't want to spend 6 weeks on removing a default if I can't remove it. So it's pointless, waste of everyone's time. I think as a broker, you want to know, is it a yes or is it a no? So we'll make sure we assess them properly. If we do take them on, they pay that fee in 2 parts, nothing payable up front. We just get half of the fee, $550, $660. If it's a massive default, I'm not going to do that for $1,200. I've got people on board at the moment with, $300,000, $400,000 defaults. I'm going to charge them $2,000-3,000 because I know that I'm going to be working on that for probably 2-3 months. But if I can wrap it up within a few hours over a few weeks, fair's fair. I base it on, I'm attracting a fee of about $100 to $150 an hour for our experience and, contacts and everything that we know. So that's how I work that out. With court actions, we charge through the law firm, so Credit Fix Lawyers. I have a lawyer sitting there. I've got to pay him and all the rest of it and the court filing costs. So basic court action removal fee is $2,000. Again, nothing payable up front. We don't hold any money in trust. We just split it into 2 parts. You pay $1,000 once we get the signed orders back from the plaintiff or the solicitor. Then we go back to court, file everything, get everything stamped, get the credit reports cleared, make sure the clients get all their credit reports, and then they pay the other $1,000.
Perfect.
6 to 8 week journey from start to finish.
Yeah. This is an interesting question. So I was going to wrap it up, but the questions are good and we've still got a couple of minutes. But what's your experience been like communicating with Equifax?
Terrible. What was their experience? Did they share theirs?
There you go, Shane, putting it right back on you. So I think everyone, regardless of whether you're in the know or in the game, it sounds like the experience is the same for everyone.
I mean, I'm not talking about, when they come out and they do talks and they talk about data and all the rest of it. Yeah, that's fine. That's great. But it's the same as when your lenders come out and start talking about rates. It's like, that's great. And that's where the property market's heading. Oh, that's great. Give me something that I can actually use within my business.
Yeah. Their one word is the response we got, which is impossible.
Very good, Shane.
Good choice. Probably one of them. At least it was one I could read out on a recorded webinar. So I was worried about what the one word answer might be, but impossible. And I hear you. I've certainly moved away from, lending and looking at credit files over the last few years, but very much I'm close to the ground to understand the battles that our brokers and their clients are having. Vic, is there anything you'd like to leave the team with today that have joined us for the webinar?
No, just look onwards and upwards, and congratulations on writing the most home loans ever. I think was just
came out this early this week from the MSWA. Yeah.
So congratulations, and keep up the good work. I know how hard you all work, but just remember, any credit reports, save an hour, flick it to us. It's a free assessment. You're putting your clients in good hands, and you can move on and do some work that actually earns you some money. So
Victoria Costa, it's always a pleasure. I love sharing your knowledge and your passion for what you do. And as I said, it's always amazing to have your beautiful face on our screens. Thank you for pulling yourself out of your sick bed to join us for our partnership series, episode 5. And thank you everyone for attending and taking time out of your day. We do appreciate that your time is precious. And we'll be sharing all of Vic's details, how to reach out to the team, so that if you do have a file that you want some work done on, that you know how to access Victoria and her team really easy. Thank you so much, everyone, and have an amazing, amazing Thursday.
Thanks, Donnie.
Thank you.